Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. Good morning, everyone. Welcome back to another live stream. It is good to be here with you guys, hanging out and taking a look at markets, top setups, things happening. Hope you guys are doing well. We've got, in terms of market movement here, a continued run in the price of gold and silver. At this point, nobody should be surprised. Gold has gone up pretty much every day for the last month and a half. It's been a monster. I mean, this is one of the most incredible run-ups I've seen in gold in my time of trading. The comparable recent time was the sort of Liberation Day April sell-off that we saw. Price of gold shot up by almost 18% from the lows. Well, we've got 16% or so here, so a similar type of move taking place. And gold just continues to be a monster. And we're going to continue to sound like a broken record on this stream, but this is not something that we want to short. And to all the traders in the last few months who have been trying to short this, it's likely been a painful lesson. By the way, you saw that in the opener. If you guys are interested in checking out DNA Funded, they've got a huge discount going on right now. And you can scan the QR code right below me if you want to explore what they've got to offer. DNA Funded is also connected to the notable brokerage, DNA Markets, a regulated brokerage. So I think those are cool ones to check out, or prop firms that are connected to an industry standard like DNA Markets. So if you want to check them out, DNA Funded is our stream sponsor here. Code A1T20 will get you 20% off there. So take advantage of that while it is available. And yeah, so with that said, let's jump into some technicals. Let's talk a little bit about how we're performing here starting out today. Taking a look at the S&P 500, we are still touching new highs. This has just been incredible. The bulls are just on parade here. Here's that Fed day sell-off, right? And then immediately shot through the highs and has continued to push higher from here. It's been really impressive. The bulls have just had a lot more stamina than I thought. The bulls are like David Goggins right now. Like, he's just running a 100-mile marathon. That's what's happening with the S&P 500. This thing just keeps going. It is truly pretty impressive, to say the least, to have such a rebound. We really had this huge move up, and then we've had pretty much a steady climb and even accelerating here recently. This is one of the many reasons why shorting indices is just really difficult. When you get into this low environment, or low VIX volatility, being very low environment, stocks have a tendency to sort of drift, and they just drift and drift and drift to the upside. There's an expression in the Wall Street world, which is never sell a quiet market. And this is a good example of why, right? You get a very quiet, calm market, and it just sort of equates to stocks moving higher every day. Now, I'm, not to throw cold water on the situation, but I am still a little bit cautious at all-time highs here with stocks. There's a couple reasons. I do think that, again, technicals look very, very solid. If we talk about, for example, the weekly chart still looks very bullish, bulls on parade. Again, really strong momentum here since that April low breakout. We've had a nice follow-through move, and there shows no signs, at least for now, of solid reversal. Take a look at the monthly chart. September is historically a pretty negative month for the S&P 500, but this year we've had an incredible, resilient rally in September. Stocks continue to charge higher. Very, very strong. So what do you do with a market like this? Well, I've been here so many times. Like I was reflecting on just how long I've been live streaming, and I've been doing live streams almost every trading day since 2018. I've been doing streams for just a very long time, and I started thinking about how many times we've seen these sorts of moves, and it's actually very frequent, or not very frequent, but you do get these events where you get, rally forever markets or downward every day markets, right? Like the dollar this year has been a big loser. A lot of people who did really well being bullish on the dollar, the dollar has reversed completely and has been just a never-ending downward trend, it feels like. So, remember that markets change. We are not going to be in melt up forever. But while the party is going, it's hard to call when the music's going to stop. Like, truly, this is not something I want to short. I have no interest in shorting it. Look, some part of me is like, oh, yeah, I think it's overdone. I think it's going to come down, but I can't time that. And so I've given up trying to do that in my trading, and for the better, right? I've done so much better in my trading, you know, many years ago when I sort of accepted that the trend truly is your friend. I stopped trying to fight these kinds of moves, and people are doing it on gold right now. They're doing it on the NASDAQ, S&P 500. We have a melt up in pretty much everything, right? You also have, TLT. This is bonds making a move higher. Bitcoin, not so much. Ethereum was in a melt up mode. We've kind of gone sideways. But you've had, pretty much an impressive rally for many, many things. And there's two things that you can't do, at least how I approach it. You can't buy it, you can't sell it. And that can be very frustrating because it's like, well, what do we do then, right? Why can't we sell this? Well, because again, trying to time this is a disaster waiting to happen. It's very, very difficult to sell a market that just wants to keep grinding up and up and up. Can it be done? Maybe there's someone out there, but not me. And I've never had to do that to make consistent money in the markets. I don't have to try and call tops in a roaring uptrend. To me, it sounds like the hardest trade in the world to short a trending market to the upside in the index world, especially. Like, you try and do that on the NASDAQ. It's a tough trade, man. That's a tough trade. How many times have you probably heard people say, oh, this is overbought, it's got to come down? Boom, kept going, right? So many times. And same thing with gold, right? You don't want to try and you do what you want, but I'm telling you what I do not want to do. I should say it specifically that way. I do not want to try and call the top in gold. I don't need to, so I'm not going to sell it. But then does that mean, Nick, that the better idea is to buy it at these levels? And the answer is still no. And I know how frustrating this is because sometimes we get into this cycle where you tune into a stream and it's like, oh, we're still not doing anything. We're still not doing anything, right? We're just melting up. We're melting up. If you're in the trade, it's great. If you're not in the trade, it can be agonizing if you stare at it and you're like, I want to be in this, right? So here's the thing, right? When it comes to a market like this, what do? Long story short, nothing. Patience pays, okay? Patience pays in trading. For me, what do I do in this circumstance? Nothing. If you're in the move, congratulations. You've got a wonderful trade. Trailing stops on this is a wonderful thing. You're capturing huge upside. And if you're not in that trade and you're like, well, I wish I was. Well, sorry, you don't all catch them all, right? That's okay. This isn't Pokemon. You don't catch them all. like it's okay to accept that though. You sort of say, okay, look, excellent move. Amazing for the people who caught it. If you didn't, then you wait and you be patient, because chasing this is a bad idea too. Because if we get a normal pullback, it's going to crush people who chase, right? This is still a normal pullback. A drop to 36.40 or 35.60, I would argue, is still an upward trend pullback. And so you think about that and you're like, if you buy here and you get a move of hundreds of dollars an ounce to the downside, that's going to destroy some people who are over leveraged chasing the top. So let's not do that. Let's not short it because we don't know where the top is. You wait. That's it. That's all you do. You wait for a pullback, or you look at other charts. S&P 500, we wait. NASDAQ, we wait. Dow Jones, we wait. Russell, we wait. If you like the DAX, maybe you watch the DAX. I actually don't love the DAX. let me see, where's DAX on this list? Yeah, DAX is getting a -4 reading. So I'd actually be looking for a breakdown in the DAX for a possible short setup. If we were to get this kind of move, I think you actually may have more downside for the German DAX. For everybody tuning in, thanks for being here. I see some people saying hello in the chat. Thank you for being here. What's up, Bullet? Duranto, thank you for being here. And to all the regulars, good to see you all as well. I know I'm on a bit of a rant, but it is, you have these moments where everything is sort of in never ending upward movements or downward movements. And it can be a little frustrating to be like, hey, you know, what do you do? Because as traders, we feel like we have to be doing something. Like as traders, it feels like we need to be trading. And sometimes the weirdest thing is like, as a trader, you don't have to be trading. You don't have to be placing new trades. I do have some trades on. I am long Aussie CAD. So the Australian dollar versus the Canadian dollar. I'm in this trade. This is going pretty well. I do think that Aussie CAD has a bit of a continuation pattern forming. I think we've pulled back to 38.2. We've found support along this previous high. I think this currency pair looks okay. It is also, I believe, still a top setup. Yep, a +5 score on the EdgeFinder. I believe the economic score is higher. Yes. So economic only, if you don't have the EdgeFinder, the economic only tab shows you just our growth, inflation, and labor statistics and how they're filed or how they're scoring each currency pair or commodity. So in this case, we have the Australian dollar versus the Canadian dollar getting a +7 on the eco score, like only economic data, not looking at COT, not looking at trends, not looking at other things, just looking at the economic data. AUD CAD looks pretty good. So I went long on a pullback on this one. Echo setups is amazing. Yeah, actually a lot of people really like this one. And I'll tell you why we made this. It's for one simple reason. The top setups simple, which I'm sorry, just top setups in general, it does sort of have an innate style built into it, right? Because it's looking at daily trends. So it's a little bit more oriented towards swing traders. I wouldn't say strongly. It gives you like the daily chart trend. And then it's looking at like sentiment, which is a bit more of a slow indicator. Like commitment of traders data is not a day trader scalper, sweet spot. It's more of a, swing traders move. So what's nice about the top setups eco page or the top setups sentiment page is it gives our users the chance to say, well, hey, look, I'm more of a day trader or a position trader, a swing trader. Like I'm more longer term or I'm more shorter term. And I just want the economic comparisons. One that is screaming right now is actually USD CAD, the Canadian dollar paired up against the US dollar. What's up, my friend? Hi. Thank you for being here. I'm sorry. It is very difficult to read chat and also get through my ideas. I'm not ignoring you, I promise. I'm thankful to everybody who's hanging with me today, and I hope you guys are all doing well. Eco's great for me as a day trader. Yeah, so it just gives you like, hey, bias in terms of fundamental analysis, macro data only. The the economic data is a little bit more, it's not so like tailored to a specific time frame. So also we have a lot of people who like the top setup sentiment page, like just show me commitment of traders data scoring, retail sentiment, put to call ratio, AAII investor sentiment. So this like ranks those things only. So if you only want sentiment readings, or if you only want economic data readings, you can do that. And we built that by popular demand of our users who are like, hey, I don't really trade like the daily chart. I trade like the 1 hour, the 15-minute. Could you build a screener that just shows me economic data or sentiment, helps me to filter that? So we did that. That's one of the reasons we built it that way. Dollar CAD is one that I like. I think dollar CAD has upside. I think that the dollar, I have really shifted from very bearish to dollar or on dollar to a little bit more neutral, but the Canadian dollar still looks really weak. So if we get a breakout move, I actually think that this one looks really good for upside continuation on the dollar CAD. So I'm watching for that. I think there may be some more upside for dollar CAD. I think you've had this downward trend. We've kind of consolidated sideways. We've based out around this this level here, which 137.55, let's call it. I think the dollar, again, I think all the trade uncertainty between the US and Canada, and not to mention the Canadian economy, is under some stress. Let's just address this in terms of the Canadian dollar, right? Look at the Canadian dollar score within the EdgeFinder. Like economic data wise, it's no bueno. Why? Why is this so rough? Well, inflation is low, 1.9% CPI, 4% versus forecasted 4.3. This was yesterday's data. Came in real soft. So this is like rate cuts are coming for the Canadian economy. The other thing is unemployment rate. Like if you are keeping up with your US data, unemployment in the US, I believe, is 4.3%, right? In Canada, it's 7.1. So they've got higher unemployment. Their inflation is at a point 1.9%. There's room to cut rates for them likely. GDP growth was negative, like minus 0.1. Like as far as I'm concerned, the Canadian dollar is looking rough. The Canadian dollar's looking rough, as my friend Steve says. Good to see you, Steve. Gold 5,000 USD tomorrow. I'm going to need some, my face is going to be like pushed back so hard from how fast we're moving. I'm going to need to go to like Thailand and get some surgery or something. Yeah. So when I look at like currency land, let's look at currency land, the economic surprise meter. Our biggest sells right now, based just on the economic data and performance relative to expectations, are going to be the CAD, Euro, Japanese yen, Swiss franc, and I'm actually a little bit nervous about what I'm seeing here. So I haven't looked at this in a minute. Wow. Look at this. You guys see this right here? Our average global economic surprise score is in the negative. Now, what does this mean? And by the way, some of the stronger currencies, now this is not necessarily saying these economies are better than everyone. It's saying their economic metrics are coming in better than the forecasts had anticipated, which is what in the short term really drives markets, is expectations versus actualities. You only have the British pound. Everything else is either neutral or bearish. No wonder gold is ripping. This is, I mean, I'm gonna say that I think this is a large reason right here, this section here, what we are looking at right there, that 36% reading. I think it's a large reason as to why gold is ripping so hard. It's not just the US showing a little bit of labor weakness. Look at our economic reads across the major economies. They're soft. Euro coming in soft. Japan, Switzerland, Canada, New Zealand. The US is close, but has rebounded a little bit in its weakness. You see what we're going at here? We are going at a global economic average surprise that is underperforming expectations. So if economies around the world are weakening, if they're softening up, and central banks are cutting interest rates, what does that do for gold? What is lowering interest rates across the globe, not just in the US, but we've seen it in Europe. They've paused since. Canada, not Japan, but maybe Japan will hold rates longer. We'll see. New Zealand, eventually Australia, I bet you. If they're all cutting rates, what does that do for gold? Big picture, it's probably still strong for gold. So, yeah. Keep that in mind. I mean, if you are somebody who likes currencies and gold, keep this on your radar. Like, use this page because it's my favorite page for currency trading. It cuts to the chase, really. It says which economies are underperforming, which economies are overperforming, expectations, and then kind of gives you an average of the group. It's probably one of the most underrated pages on the EdgeFinder. I don't know. If you're an EdgeFinder user, do you use this page ever? I love this page. Like when it comes to currencies, this is stop number one for me, is to see what the surprise meters for the respective economies are looking like. So when we look at like dollar CAD, right? How would you read dollar CAD? Well, maybe the biggest divergence that I can see on this chart is going to be pound CAD, right? Pound getting the strongest score, CAD getting the weakest score. So let's take a look. Hey, Len, good to see you. Good evening. Sorry, late to a typhoon affecting our area. Wow, I hope things are okay where you are. Stay safe, my friend. I use it often. Yeah. Great summary. Hey, Denise, good to see you. Yeah, thanks. It's a great tool. It's probably my favorite tool for currency trading. Because it's so dumb or like so dumbed down. I mean, it's not dumb. It's so simple, right? Do you think silver will go down? Lynn, yeah, so I don't think so. That's my honest answer. I think we are due for a pullback, but we've been due for a pullback for a few weeks. So I'm not going to try and time that. Would love to see a pullback, right? But I'm not going to try and time that. I wouldn't short it personally. Like I would be interested if silver pulled back, depending on what the economic data, like I've lost a little bit of my bullishness for metals, to be completely honest, due to the US data rebounding. Like we've had some good growth metrics. So I'm a little less attracted to gold and silver unless they pulled back. Then I think you have a little bit more risk to reward. Anyways, let's finish with this thought, this pound CAD idea, right? So if I'm looking at GBP CAD, a pair I haven't traded in a long time. Pound CAD, right? So getting a strong economic only score, or at least it should. Let's see. If I go to my top setups eco page, is pound CAD getting a pretty good score? Yes, it is. Pound CAD is getting a +9. So comparing the two economies, the UK outperformance to relative to expectations versus Canada's severe underperformance relative to expectations is materializing in the top setups eco only page. So when we look at pound CAD getting a +9 score, what do we do with that? Well, for me, what that would mean is I take a look at this chart and I say, okay, well, we're a little choppy, to be completely honest. I don't love the technicals on this chart. But if we were to break away in this kind of consolidation zone, we've been consolidating for several months here, pretty much most of 2025. If you were to get sort of a leg higher here, a pullback into this area, I like that. Like I do like to add in the technicals to what I'm thinking fundamentally. Like I don't want to just buy the chart and hope that I get some movement, right? I want to wait for the chart to start moving. So that is my opinion. I like pound CAD to the upside. We have some potential higher lows forming. Would love to see this sort of take out those highs, and then maybe you have some follow through to the upside. But pound CAD would be a candidate. Now we can repeat that process, and this is what it looks like to trade with EdgeFinder. By the way, the producer behind the scenes set us up here with this QR code. If you guys would like to try the free version of the EdgeFinder, I know a lot of you guys who are watching already have it, but if you do not have it and you want to try out the free version, you can do so. Simply scan the QR code that's on the screen right now, or click the link that's just been dropped in the chat for you guys. Thanks very much to back of the studio. Appreciate you guys. Yeah, so fill out that form if you're interested. We'll send you over the free version of the EdgeFinder. Please note it is a limited version, but it's a great way to explore the tool. And if you see value, if you're like, this is cool, purchase a copy of the tool, support the projects that we're working on here, and get yourself some really great tools to help you scan markets. What's up, Bala? Good to see you, my friend. Yeah. Pound getting a good score while one of the first pairs, pound yen, looks bad. Let's see what pound yen looks like. Pound yen. Yeah, man, it's been chop fest on pound yen. I do not blame you. That calling a barcode, that's so true. It does look like a barcode, doesn't it? Yeah, pound yen. So this is where, you're getting a good reading here, but I'd like to see something like this, right? Boom, boom, like a little bit of momentum goes a long way. I really prefer to trade a chart that is moving up or moving down rather than moving sideways. Like moving sideways is tough because you just sit there. And now if you're long pound yen, you do collect positive swaps. But if you're short pound yen, it's a costly venture. Every day that rolls over, your cost of holding it is pretty immense. We need a video or explanation on how you go through your EdgeFinder picks from A to Z, my friend. Well, I got some for you. Where is it? Do I have it in here? I have it on my, I have this. Don't look at it now because stick with me on the stream here, but you could save this link. This is a playlist that we have that's like a fully top-down how to use EdgeFinder. But I'll show you also a live example just because you asked about euro dollar specifically. If I was to look at euro dollar, right, from an EdgeFinder lens, let's say, let's compare. It depends what your style is. Like if you're more of a, if you want, like I like the top setups overall page because I like trading, you know, the 4-hour, the daily charts a little bit suited to swing traders because it gets a daily chart. Like part of the scoring, part of the technical scoring is suited towards seasonality, which is a month-to-month reading, and trend, which is a daily chart reading. So there is ingrained in this a bit of a swing trading aspect. I am a swing trader. I like the 4-hour chart. So I would then say, okay, let's just go major currency pairs because I know I can get to euro dollar easy. Neutral reading. And that's okay. That means there's just nothing for me to do on euro dollar. What that tells me is that the economic data is painting a mixed picture when comparing the euro versus the dollar. Sentiment reading, in this case, is painting a mixed picture as well. And technicals are painting a mixed picture. Seasonally, this month is not great for euro dollar, but the trend is still up. That's a mixed painting, right? So that's what I mean by it depends what you want. If you're more of just an economic data only, let's see if there's anything different here. I don't think there is, but let's do the same. Let's just do major currency pairs and look at euro dollar. So euro dollar is actually getting a slight -2 score, not a huge bearish reading, but just on the economic data alone, you're getting a mixed picture. And what this software is doing is it's scanning. It's looking at GDP, PMIs, retail sales, inflation readings, employment data, interest rates. It's looking at all that. And then it's saying, okay, generally, it's pretty neutral. Like going one for one, there's not a strong bias. Then we compare it to something like dollar CAD. Dollar CAD's different. Dollar CAD is getting a very clear favorite. The dollar is outperforming in a lot of metrics compared to the CAD's underperformance. We just got done doing that earlier in the stream, right? So that is what I mean by the EdgeFinder is going through what we just got done. Like high level view, just screen capture this in your mind for a second. CAD data looks weak for the CAD. Straight up very weak. Soft inflation, slow growth, employment data doesn't look super promising. CAD looks weak. Look at the dollar. Screenshot just like from a mental view. Okay, it's a little bit more mixed. Which one would you rather choose? The one that has a little bit more of a mixed, I mean, US data is not great, but you have to remember currencies are the best of the worst sometimes. Like sometimes you have to pick the one that looks the best of not great situations, which is some slowing data across the globe right now. So which one do I want to pick? Because remember, currencies trade versus each other on a relative basis. We've actually had some decent data from the US dollar. So that's what I'm saying is you want a software like this because it screens a lot of this stuff on your behalf. Like that's too much stuff to try and do in your head. Instead, the tool essentially screens that stuff for you. And if you're more of just like it depends what your style is. If you're a day trader, maybe you're looking at more of the sentiment side, like what is the commitment of traders telling me, what's the retail positioning looking like, what's the put to call ratio, or maybe you're more of a swing trader that likes to look at economic data. You have options here on how you use the EdgeFinder. The EdgeFinder is not an out of the box do it for you trading system. It's a software that helps us to screen a lot of data to make better informed decisions that most traders just don't have the tools to screen, right? So that's what EdgeFinder does. That is how to use it to spot trades and to build bias that makes more sense. Speaking of EdgeFinder, you can see right below me that if you're interested in a 30-day trial or getting access to the free demo version, you can do so by scanning the QR code or clicking the link being dropped here in the chat to get access to that. Just fill out that form. It takes like 1 minute, and then that will get you connected to where you can get access to the tool. We'll just send it to your email. So just plug your email in there. It will send over something for you. You'll also receive some marketing emails from us, which you can opt out of if you do not want. It's really easy to get off our email list, and we don't send that many, so don't worry. With that said, up next, we've got Marco from Marco's Trading Journey taking over the stream for a little bit, talking more trading setups. Don't go anywhere. He too is both a technical and fundamental trader utilizing the tools available with the EdgeFinder. Stick around. Right after this quick break, you'll hear from him on what he's watching in markets today. Hey stream viewers, if you're outside of the United States, I have a cool offer I want to tell you guys about thanks to our partnered broker, 8cap. 8cap is currently offering the ability for new depositors to get access to our premium tool, the EdgeFinder, completely for free. Now, how this works is basically you create an account and deposit a certain amount of money into that account, and they will essentially buy the EdgeFinder on your behalf. So it's a win-win-win. They get a new client for a reputable brokerage, you get access to the EdgeFinder and a great brokerage to trade with, and you'll be supporting the show by signing up with 8cap. Now, here are the steps if you want to find out more about this specific offer, but make sure to follow them specifically as we list them out on the screen here. Step 1, navigate to a1trading.com/8cap. That's a1trading.com/8cap. Step 2 is to follow the instructions and to make sure you use the specific link on that screen to sign up for your new 8cap account. Step 3, complete the required deposit amounts and contact their team as instructed on the page. So if you're interested in finding out more about this offer, head over to a1trading.com/8cap, and we'll also be dropping the link to this down below in the live stream chat as we speak. Like I said, make sure to follow those instructions specifically if you'd like to get access to a free copy of the EdgeFinder if you meet the deposit requirements as listed on the website. Full information, like I said, can be found a1trading.com/8cap. Now back to the stream.
Hello everyone, welcome to my segment of the live stream. So I do hope everyone is doing well. So Euro GBP buy setup, if you have been in the A1 Discord, this was a signal on the 11th of August. It has finally hit the take profit. So I'm out of this trade. It's plus 1.16 R, but then I did pay negative swaps, so the swaps were quite heavy, but in the end it was an okay profit. So I did also get a question. Why did I use a take profit? Why didn't I trail my stop loss? Why didn't I try to see if this thing wants to continue going to the upside? Well, that's a pretty good question, because usually you want to maximize your reward to risk. Usually you want to use a trailing stop loss if you're a trend trader. But in this particular case, when I took this trade around here, I personally was expecting a quicker reaction. So I was pretty bearish on the pound. I was pretty bearish on the UK. And I was expecting something like this to happen. So quick reaction, quick uptrend, quick push through these highs. That unfortunately did not happen. So because we started to heavily range around, and because I got stopped out, almost got stopped out a couple of times, the swap started accumulating. So I needed to switch strategies between a trailing stop loss into a fixed take profit. So yeah, after basically a month, I decided to place a take profit. And fortunately, we did hit that level. So it was 0.87370. Now we're out. So if this trade was positive swaps, I would have been pretty happy to possibly trail my stop loss. Also, if we check the EdgeFinder, I think lately the UK did start to get some okay data. Yeah, 60% of the data is coming out better than expected. Which is a shift, because we used to have, like a month ago, mostly bearish GBP data. So it was no longer such a good trade. And those swaps are really, really heavy. The swaps can make or break a trade. For example, I'm long Aussie CAD, I'm long USD CAD. For these positions, I wouldn't mind holding them for 3 months because I'll just keep accumulating positive swaps, and I just don't mind allocating my capital to these long positions. But for negative swaps, especially because the brokers put even higher negative swaps than it should be in theory, because when you pay swaps, you pay much more than when you receive swaps. So if I sell Euro GBP, I'll be collecting much less in swaps than when I went long Euro GBP. It's sort of an added commission by the brokers. It's sort of an added way to screw you and to gain more profits for the broker. So you need to keep that in mind. Your best friend should be the carry trade scanner. Okay, so the carry trade scanner, before you take every single trade, you need to account for swaps. You need to account for that extra expense if you are a big swing trader. If the worst case scenario happens where you pay negative swaps for 2 to 3 months, it can happen. This trade lasted for, let's see, 43 days, quite a long time. So that's about it for this position. My watch list hasn't changed much from yesterday. I'm still looking at very, very similar things, pretty much the same things. Gold is still flying. Silver is still flying. One thing that I noticed by doing some research today, if you go to the monthly chart on gold, and if you go to the indicator RSI, Relative Strength Index, where is it? Let's see. Okay, here it is. It is kind of rare for it to be above 85. Okay, there's been only a couple of times that the RSI index. Now, I'm not saying that with the RSI index, it's a guaranteed way that if you sell right now, it's going to go down. We can be in the overbought territory for quite a long time. I'm just telling you a bit of a warning sign that a pullback may happen is that on the monthly chart, RSI being above 85, 86, it wasn't a really often occurrence. It happened, I think it happened here in 2020 possibly. It happened in 1980 or 79, and looks like it did happen in 73. Usually what follows is a correction. So usually that is kind of a signal of an overbought territory. But again, does that mean I'm going to sell? Does that mean I am becoming a seller of gold? Absolutely not. I would not be looking to sell gold. I think that's a very dangerous proposition. And again, we can continue for quite a long time before we actually get that pullback. What it does mean is that I'm not going to get massive FOMO. So it does mean I'm not going to buy at these highs. Let's see, from these lows, how much did we go up? 14%. Wow, that's quite heavy. So gold, massive explosion, looking for a pullback. What I would personally like to see is a pullback like this. Okay, pullback like this. Possibly to the 3,500 level. Okay, so possibly to this level. If we can pull back, hit the level, reject, I would be happy to look for buy setups. And that would mean the RSI would go down a little bit. It would stop being so crazily overbought. And I would get a nice opportunity to get into a positive reward to risk. Then my first target could be the highs. Okay. That's my game plan. I'm watching these charts. Looks crazy, but a pullback may happen. Oh my God, so many comments. So we do have some news in, let's see, I think it's in 4 minutes. Let's see, 3 minutes. There's a nice countdown here. We will see what will happen. If you're wondering what will be the reaction, if you open the detail box, actual number greater than the forecast is good for currency. That's the general rule for these numbers. Actual greater than forecast is good for currency. Very simple cheat sheet. You don't need to be a rocket scientist. You just need to have Forex calendar. You can use the cheat sheet. It will tell you the usual reaction that happens. So let me quickly glance through the comments if I can see. So, hey Ballout, hey Slugmeister, hey Jakub, hey Sahil, Aussie Cat doing good. Yes, Random Oz guys, so we'll take a look. Aussie Yen, Euro GBP, take profit got hit, correct. PMI soon, yes. Hey AV, whoa, AV, what's up? Great to see you as well. Andre asks, GBP USD goes up. We can take a look at the GBP USD. We can take a look. Okay, Aussie CAD, gold seller buy. Where is Nick at? So yeah, Nick's segment finished. Now it's my time to take over. Okay. News. Aussie NZD. So let's do GBP USD. Let's analyze GBP USD. We can also see the news reaction from the US dollar. So let's take a look. GBP USD. I'm bearish on the pound. I don't think the pound long term is going to do well. They're facing some stagflation issues, bad growth, bad GDP, bad employment, bad inflation. So stagflation basically. US dollar, I'm neutral / maybe even a bit bullish because everyone used to be bearish right before the Fed, and then the exact opposite thing happened. Possibly people are still bearish on the dollar. I think we are either going to range around or maybe even go a bit higher. That's my personal forecast. That's sort of a contrarian approach, and you definitely want to have a contrarian approach in these market conditions or generally in trading. So GBPUSD, I don't really have a bias. We can check on the EdgeFinder. Top setups, GBPUSD. Neutral. Technicals look neutral as well, if I'm being honest. So breaking news coming up in just a couple of seconds. Let's take a look. Will the print be immediate? I think it should be immediate. So yeah, pending, it's gonna come out. It's gonna come out sooner or later. Kind of looks flat. Okay, GBPUSD kind of looks flat here. I don't have a bias. I think there's other better opportunities out there. So this one is not really on my radar. I just got out of Euro GBP longs. I don't want to get into another GBP trade right now. Okay. And I'm going to explain why, but let's check the numbers. Still pending. Okay, so they'll take some time to load. Doesn't matter. Maybe we can see a reaction on the euro dollar. Yeah, nothing big so far. The problem with GBPUSD for me is short-term data for the UK is coming out better than expected, but long-term data is coming out bearish. So if I'm looking at long-term trends, they're not looking healthy. GDP is all over the place. Unemployment rate in the UK is rising. It's sort of in an uptrend. Yeah, definitely in an uptrend. Then you look at inflation, which is at 4%, pretty close to 4%. GBP, yeah, rising on inflation. So the short-term data and the long-term data does not really mesh together. I like when the short-term data is bearish and the long-term data is bearish. That would be the current case for the CAD. If you look at Canada, short-term data, absolutely bad. Only 12.5% of the data is coming out better than expected. Most of it is coming out bearish for the CAD. Long-term data, same thing. Very bearish. Very, very bearish data. So that's why I have things like Aussie CAD long, USD CAD long, Euro CAD long. Those are the plays that express my view for the CAD. CAD right now is probably the worst currency, the weakest currency. So let's take a look. Okay, so we pretty much came in a bit lower than the forecast for manufacturing, and services came in a bit lower. So is it a big miss? No, not really. It is lower than the previous number though. So that is a sign of a bit of a potential slowdown. But the reaction so far seems to be kind of muted. Let's zoom in on the 5-minute. Yeah, I mean, nothing significant. So this is not really the news that you should focus on. The next big news event that I'm personally focusing on is next week. So first Friday of the month, you have NFP. Okay, NFP. I did do some research, and what I noticed is that a government shutdown is likely to happen, which should mean that NFP gets delayed. So there is a possibility of the US government shutdown, which lasts for a few weeks usually. Just it was a quick glance on some data. If that does happen, NFP gets postponed. So we will see what the reaction will be to the markets. Okay, let's check the comments. Sell gold. Camera is lagging. It shouldn't be lagging, but do let me know if something is not working well. Okay. How to calculate swaps? Well, it's not so easy. It's not so straightforward. A great tool to use is ChatGPT or Grok AI. So just input what you need, input your trade size, input your stop loss, input the instrument, input your broker, and put in how much swaps are you paying. ChatGPT should do the calculations automatically for you. So FitLife says, which prop firm is best for getting funded? Now, that is a good question, and it's a good time for me to mention the sponsor of today's video, which is going to be DNA Funded. Okay, so if you guys are looking to expand your trading capital, if you're looking to get a 50K or 100K challenge, you can get 25% off with our discount code, which is A1 Live. So this is a special discount code only for our live stream viewers, and it gets you 25% off a funded challenge. I currently have a 50K funded account for my ChatGPT trading challenge. It is a bit down, as you can see, total loss. And 2 trades open, bought SPX, so ChatGPT bought SPX, and it sold Aussie Yen. Both trades in running in a little bit of profit, so we will see what will happen. Very interested to see it. Performance in the last 90 days was plus 23% from the signals from ChatGPT. So if ChatGPT can keep up the performance, then we should be able to pass phase 1 and pass phase 2. Again, summary is, if you guys are looking for a prop firm, this is a great option. So DNA Funded, and you get 25% off. So you get a very, very competitive price. Definitely do check it out. Okay. Yeah, pretty much the news came in very close to the forecast. What is your view on the DAX? How to know long-term and short-term data? That's a good question, and it may be a bit confusing. Basically, if you're using the EdgeFinder, the short-term data is located in the economic heat maps. So this is all short-term data. These are the latest data prints for specific currencies. Okay, latest data prints. That's what I mean when I say short-term. When I say long-term, you need to look at the GDP trend for the CAD, for example. These are the data prints from the last 1 year. Yeah, This is the last year of data prints. So this is a much more long-term indicator, and it tells you of what is the overall trend. The trend here is down. The trend here is almost negative. It is actually negative GDP. Then you open up the labor market. You look at the unemployment. You look at also the last year. Yeah, last year, uptrend. That's another warning sign. Then you look at the CPI, which is my favorite inflation gauge. And you look at the last year. Are we in an uptrend? Are we in a downtrend? Or are we flat? I would say lately we have been flat. And you need to look at the target inflation rate, which is 2%. So we are around 2%, meaning there's not a lot of room to cut rates. An even better chart would be GBP, which is in an uptrend. Okay, so GBP looks to be in an uptrend in terms of inflation, which is very, very bad. And look how far away it is from the target inflation. So we are at 3.8%, massive warning sign. In most cases, if the short-term data fits the long-term narrative, like with the CAD, short-term data is bearish, long-term data is bearish, it's pretty good to go short. You can get a big trading edge by going short. Aussie NZD, Trump, hold my beer. AJ setup, can you tell? Okay, the camera is not lagging. Great. Okay. So you guys wanted to see Aussie Yen and the DAX. I saw a lot of comments about the DAX. What is the DAX doing? Why is the DAX so interesting? For me personally, DAX looks just super boring. DAX looks super flat, very uninteresting, and I'm just waiting for a breakout. For me to get excited once again, and mind you, I already took 2 losses inside of this chop, inside of this range. I'm not looking to take a third one. So for me to get excited about the DAX, I need to see it break this level. If you're a swing trader, in my opinion, there's much better things to look at than the DAX. I think the DAX looks really flat, really boring. If you get into a buy position, you will just pay negative swaps and you will just lose money because you'll most likely get chopped around. So right now the DAX is in sleep mode. Until it wakes up, there's nothing for me to do. It's not even close to the upper resistance of the range. It's not even close to this level. So I'm not liking the DAX. Now the next question was Aussie Yen. Here, DJPY. Aussie Yen, in terms of the daily, it looks bullish. So the daily chart actually looks interesting. Let me check on the top setups. AUDJPY. Also, guys, if you're looking to get the EdgeFinder, if you're looking to join the Discord, if you're looking to get trade signals and trade analysis from me, you can do so by using my discount code, which is MARKO. Okay, you get a nice discount on the EdgeFinder, you get a nice discount on the Discord. So if you want to join me, if you want to trade with me, if you want to learn how to trade, do use this discount, and I will see you inside of the Discord. AJ bullish right now, and it fits the technical analysis. One thing though, for the Japanese yen, I'm kind of flat right now. I don't have a massive view, a massive bullish or a massive bearish view. I have more confidence in the dollar, if I'm being honest. So the yen just seems to be flat. The yen just seems to be very flat in this area. And also the prime minister, I think it's the prime minister, Ishiba, has resigned. So there's going to be a new prime minister, which can mess up the fundamentals. It can have a big impact on the yen. I think he should be chosen pretty soon. I think maybe even over the weekend. So until that happens, I shall remain a bit more patient on the yen pairs. Aussie I like. I think the Aussie is doing okay. We can do some analysis. So check this out. Let's first do short-term analysis. So let's look at the Aussie economic heat map. Most of the data is coming out better than expected. This is bullish. Let's look at the long-term data. Let's look at the GDP. positive, looks okay. And can we do the last 2 years? Okay. I mean, it's positive. It's not so bad. And as Nick mentioned, most of these currencies trade against each other. They trade relative to each other. So even though the data doesn't look stunning, if the other currency is really bad, Aussie should still appreciate against the other currency. So let's check out the unemployment rate. I mean, it's kind of flat, 4.2%. It's not really problematic. So it looks okay. Doesn't look great, but it looks okay. And now for inflation. Let's see the inflation story. I think the inflation story is okay for the Aussie. Yeah, it is. It's in a definite downtrend. So I can for sure spot a downtrend on this chart. I would say short-term data is bullish. I would say long-term data overall looks neutral/bullish. So I would be interested in buy setups. The thing that I like much more is Aussie CAD. So the CAD is super weak. Aussie is super strong. You get paid positive swaps. How do I know? I check on the carry trade scanner. I put in Aussie CAD. See, carry direction is a buy. So if you're buying, you get paid positive swaps, which is always nice. And I plan on holding this position for 1 month, 2 months. I have quite a big stop loss, 110 pips. So I don't mind holding this position for a long time. And again, this is a more preferable trade to execute than the Aussie Yen, because I haven't yet gained a lot of confidence on the yen. I don't have a big bias on what to do with the yen. I know you guys also love the USD yen. I do have a trade on, but this is for sort of an experimental approach. So I'm not sharing this one in the A1 Discord because I'm not yet sure about the edge behind it. It's still in testing mode, let's say. So this is just for my own research purposes. It's a short-term trade, tight stop loss, tight take profit. My bias is for us to just range around for UJ. I don't think we're going to have a massive development on UJ right now. As I told you, there is a bit of uncertainty with the Prime Minister of Japan. So for UJ, there's also been a really pesky buyer, a really prevalent buyer at these levels. The guy has just been heavily buying, some sort of a huge whale has been heavily buying this level. So we just cannot seem to go lower. And right now, I don't really want to execute any long-term setups on UJ. I think we're just going to range around this range. That's kind of my play, maybe going to the upper line of the range and not really going much lower because of this pesky buyer, because of him heavily eating up this level of support, okay, or supporting this level. So let me check on the comments. Daily time frame is a good time frame for swing trading. I would say absolutely it is. I think if you want to give yourself the best probabilities of success, daily time frame is the thing to look at. You're going to have the easiest time. You're going to have slow developing trades. You don't need to be fast. You don't need to make fast decisions. You have a long time to think about what you're doing, to calculate all of the lot sizes, to look at all of the levels, to put your take profit, to put your stop loss in. So also, if you're trading the daily time frame, it is pretty easy to implement even with a full-time job, which is something I highly recommend that every single trader has. Main source of income, trading is a side business, okay? Because you don't want to be a full-time trader and then bills start rolling in, and then you're in drawdown, and then you're forcing setups, and then you get into even more drawdown, and then you don't have money to pay for bills at the end of the month. That is a recipe for disaster. So if you want to be successful, keep your full-time job, look at the daily time frame, execute these swing setups, watch out for the swaps. It's really not that hard. Join the Discord, join the A1 Discord, follow our trade signals. It's not just a trade signal, it's also an instruction of how we came up with the trade idea. So if you can dissect our reasoning to get into trades, you'll be able to copy it and start trading, start searching for trade setups on your own. So it's not about the actual trade signal, it's about all of the data behind the signal that will teach you how to make money in the markets. Okay. Trump is speaking at the UN. Anything to look forward to, anyone? Well, Trump was really active with tariffs, super active with tariffs and trade deals. It is no longer the spotlight. You kind of see, what we can see is we went from this heavy influence of tariffs, this heavy influence of trade deals in 2025 to focusing on what the Fed is doing. And these are all called macro narratives. So the markets keep moving from one narrative to the other. Narratives usually last for a couple of months. So now we have switched from tariffs and trade deals into what the hell the Fed doing. And you can see it in the news. You can see it in financial juice. You can see it in breaking news, in Bloomberg. The emphasis is no longer on trade deals and tariffs. It is now on the Fed. That is what you should watch out for. So the Fed right now is the most important part. Okay. So FitLife asks, is it possible to pass a prop challenge by copying Nick and your trades? Yeah, I would, as Nick said, probably not a great idea. Much better to learn to trade, prove that you can trade in the live markets, and then consider buying a challenge. Okay, if you're going to rely on somebody else to give you signals, that doesn't really it's not really the best way to proceed. Okay, because if you solely rely on someone's signals and you don't understand anything behind the signals, when the eventual losing trades come, when the eventual drawdown comes, and trust me, the best of traders deal with drawdown, you're not going to have the confidence to keep following the signals. You're probably going to stop following the signals, and then you'll miss out on the winning trades. So much better, much more efficient to actually do your own work, but to get some inspiration, to get some knowledge, to get some trade ideas from Nick, from me, from Chris, and from Ivan, and from all of the other guys in the Discord. So it's not a signal, it's a teaching tool for you to start trading on your own. DAX is interesting. No, DAX is not interesting. I'm sorry. For me, the DAX just looks so choppy, so flat, but it may be because I took 2 losses. Okay, so I may be a bit biased, but for me as a swing trader, I don't see any opportunities right now. If we break the highs, then yes, I would be interested. How have you been using ChatGPT to generate signals? I just asked ChatGPT, give me 2 trades, one on the S&P 500, one on a major currency pair. And then it gives me the signal. I put it into DNA funded challenge. And this is just, again, for testing purposes. If I lose the account, I won't mind. But historical performance that I already did was pretty good for this approach. And I thought, why not test it on a funded challenge? That would be pretty fun. So yeah, basically I just get a signal, put it into, or from ChatGPT, and I put it into DNA funded. Trump's speech, a big event. Maybe if he comes out with a breaking news crazy statement, you never know. It can always happen, but am I expecting it to be a big event? No, not really. Okay. So since we are nearing the end of my segment, Bitcoin, not interesting right now. I think it looks a bit corrective. I think it looks a bit flat. Ethereum, I think we are near the top. I think what is going to follow is a bit of a sell-off. I think this is overextended. We have been overextended for quite some time. I'm just being a bit patient on crypto. I think there's better opportunities out there. If you're going to get in this, you could get chopped around pretty easily. Also, if you follow the halving cycle of Bitcoin, right now we are in the part of the halving cycle where Bitcoin loses value or stays flat. That's another extra confluence why I'm not looking for massive buy setups. And for Ethereum, you had a lot of crazy US companies trying to pump up their stock prices by buying Ethereum, artificially inflating their stock price. And that's going to cost both those US companies, and it's going to cost Ethereum some value when people realize it was a big bubble. So Ethereum right now, Bitcoin right now, they're not for me personally. I do want to run through my watch list for today, and that's gonna be the end of the video or the end of the stream. Yeah, Random Moss guy, goodbye. So see you in the next one tomorrow. If you guys want to join me, I will be live streaming. So you can catch me, I believe, at 10 a.m. Eastern Standard Time. I will be on tomorrow. But anyways, NASDAQ, closely watching, but I'm looking for pullbacks. Gold, closely watching, but I'm looking for pullbacks. 3,500 would be a great level to buy. Silver, same thing. I think we are overextended here. Am I selling? Absolutely not. I don't want to be the one selling this massive uptrend because we could continue up by a huge amount. It is a possibility. I just don't want to buy. Here, I want to buy a bit lower. So silver, same thing as gold. Euro GBP got taken out for a win. Aussie CAD is a pretty good setup in my opinion. Aussie strong, CAD weak. I have a big stop loss in, and I'm just going to trail my position. Positive swaps. USD CAD, I like as well, around break even. I like the pivot of people being super short the dollar, not expecting Powell to be hawkish, not expecting Powell to be concerned about inflation. And then we pretty much had an explosion up in the value of the dollar, which was a big pivot and a big unexpected move, which I like the most. I think you have the most opportunity when everyone is expecting that something will happen, but then that one thing does not happen. Instead, a whole different thing happens. Okay, so that's the USD CAD trade. I do have some decent size on this one because I think the probabilities are there. I think that the math behind this trade is worth taking on a bit more risk, and I do get positive swaps, which is always an added bonus. Euro CAD is another way that I'm expressing my CAD short bias. Euro is doing pretty well. The euro is a decent currency with the Aussie. I think the Aussie and the euro right now are pretty good. I think they're pretty strong currencies, so I like this play as well. You can see my stop loss is pretty big. I could have made it a bit smaller, but I do like this psychological level of 1.6. It's a nice round number. Guess what? People like to put massive orders at round numbers. That's just the way we are wired. So you want to put your stop loss a little bit below a massive round number. USD Yen, yeah, in this trade, but not really going to discuss it here. This is more of an experimental stuff I'm doing on the side. So that's about it. I hope this helped you guys. I hope this helped you to know what I'm focusing on. I can see a lot of you are focusing on stuff that, as a swing trader, I don't find the best edge. Okay, DAX, Aussie Yen. I know we mentioned Aussie Yen. I know a lot of you are looking for UJ, but you know, as swing traders, I don't see massive opportunities in terms of trend following. Maybe on AJ, maybe buying AJ. Okay, maybe buying AJ. The rest of the stuff, I would be a bit more patient, but that is just my opinion. So thank you guys very much for watching. You can find me in the A1 Discord, and I will see you tomorrow on the stream. Goodbye.
Thanks for watching today's show. Remember to subscribe if you're new and to turn on post notifications so you don't miss the next one. If you're looking for more free trading content, consider joining our Telegram channel, linked in the description down below, or find free courses, prop firm discounts, and broker sign-up perks on our website a1trading.com. That's all for today. We'll see you back tomorrow.